Hey folks, Dan Frio here, the Mortgage Update. Today is February 26th, 2020. So let's get on to what happened today. The number, it's actually, I'll take it. We're still going in the right direction, not at the speed that we have been back at the beginning of the week with the coronavirus and the crash of the stock market. But let's get on to what happened today. Okay, so let me go through this guideline right here. This is basically alerts that I get throughout the day, and I've done this video before where I kind of explained, you know, how I get alerts. So the morning alert comes out and it tells me just basically mortgage applications are up about 1.5%, which they should be more. You have the lowest rates in history, and you have home prices increasing. You have a ton of people buying homes. So this number surprised me, but it really did, you know, it's not going to really affect the market. The next thing comes out, the stock market opens up. Bam, we're up 156. At one point of the day, the Dow was up 400 points. Okay, remember that. Let's keep that in perspective. Up 400 points at one part of the day. Then we go this, and then the home sales came out. There were 764,000 people bought homes in the last year. You know, that's a lot of the transactions. That's a lot of people that hopefully aren't. No, I won't say hopefully. They're not doing the wrong thing. What are they doing right? Well, they want to capitalize on, one, the American dream. Two, the appreciation throughout the whole country, where appreciation is up about 6% a year. Three, the lowest rates basically ever in history. And you still have a huge tax advantage of buying a home. You get to write off 100% of the interest. And in most cases throughout the country, and I do loans all over the country, you get to write off the real estate taxes up to a certain degree. And 99% of those homes qualify for 100% tax deduction on or write-off of the taxes that they're paying on the property. So it's a win-win all over the map. So let's keep going on. I get an alert midday, then the next thing that comes out, midday, the stock market's up 142, and then, what starts to happen? We start to crash again, okay? And then I get an alert at the end of the day, what's happening? All right, so let's kind of dig down what happened. Let's look at the charts, all right? So we're hitting resistance right here, the Fibonacci levels. So those out there that watch me every day, we have a new Fibonacci level. We got a floor and a new ceiling. What are these? Why do we even pay attention to these numbers? Well, these are basically economic numbers and charting numbers or grids that we follow as economists, and you know, if you're in the charting of things and everything like that, we follow these heavily because they usually play a key role when it comes to trends. Okay, the tough thing about right now is it's hard to say what the trend's doing because the coronavirus is now throwing havoc throughout the whole world. Like yesterday, they announced that it's not how many people, you know, are people in America going to get it and how many? It's when are they going to get it and how many? So that's a key role. But look at right here, we're hitting a resistance level right in this area. So if you remember, I think yesterday the Fibonacci level was kind of right here, but why it increased is because we had some bumps throughout the day in the last couple of days that pushed up. You see where this line kind of goes, the little green line? If you're watching on a phone, you probably can't see it, but if you're watching on a computer, you can. There's little spikes in the market, brief spikes that actually pushed some levels up. So right now, the Fibonacci levels is, just think of these as some guidelines or bumpers that you're driving a car and you hit the guardrail, and it just keeps you on the road. Okay, so that's what's happening right here. Look at the trends that we're seeing in markets. Okay, I'm going to throw some different lines in here. And look where everything's taking us. It's still taking us into these areas here. I think we're going to hit resistance here. This is a huge run in rates to the good. So they're coming down is basically what's happening there. And I'm going to show you some great news out. I don't know if we have the news here. I'll go through it at the news report that I'm going to go over with you here next. But look at these trend lines. Okay, that's great news. We are above all the averages. So if you look at these lines here, you're saying, Dan, what are these lines? Well, These lines vary. They're the 25-day moving average, 50-day moving average, 100-day moving average, 200-day moving average. That's the DMA. So basically, these lines blend out where we should be if you're moving on the averages. We're way above all of them. So it kind of is a little bit scary because it's like we're way better than we should be. But the news is I don't see rates getting any worse here in the short term as long as the coronavirus is out there. But once everything comes back to normal, once the dust settles, they have the coronavirus in check. Everything is priced into the markets with because there's a lot of companies doing really bad because of this. We could push all the way back down to these areas in here where we should be if the coronavirus didn't hit and basically shock the system. That's probably about a 0.5% increase in mortgage rates. So right now, I watch this every day, all day, because I don't want my clients to end up down in this range. We just locked an FHA loan at 3.125% on a streamlined refinance. We didn't need their income, and we didn't need an appraisal. We showed that they had pretty good scores, and as long as they made the last 12 payments on time and have a pretty good score, we could rewrite their balance to the new rate. It was a 3.125. APR was, I think, 3.46 or right in that range. That's what we were able to do, and they were at 4.5. It was like a $300,000 loan, so they saved a ton, and they're going to prepay that mortgage a little bit. But there's check with your financial analyst on that. You might want to, if you're paying 3% interest on the money that you're borrowing and you're writing off the interest, your probably effective rate is in the 2s. Maybe you throw that money in the market or in some kind of investments. And as long as the investments are yielding over 2 or 3, you're making more money on that side than this side. So just a thought. Check with your financial planner. So that's that. So the charts are awesome. 10-year Treasury starting to bounce back up. It hit the record low and now it's popping back up a little bit. So that's expected. So let's get to the news. Basically, you can see through here, at one point, the Dow was up over 400 points, ended up down 121. I think that's a 500-point swing. The Bankers Association says applications are up 1.5%. That's expected. Somebody sent me a clipping from CNBC yesterday saying the 30-year rates were like 3.375. They're not. I mean, unless you pay a bunch of points and a bunch of fees. This is a more realistic number right here. So the going rate today on the average 30-year rate, and there's a whole bunch of factors that go into your mortgage rate. So if you want to find out what you qualify or what you would get, call me. This is an average. So there's going to be half that are higher, half that are lower. But they're probably not going to be much lower than this, except if it's an FHA loan or you're paying points. Look at this. This is 93 basis points, or 1% lower than we were this time last year. So even if you bought last spring, send me your mortgage statement, and I got there's a pile here of, there's probably 9 that I got today. People wanting me to touch base with them, and I got back with most of them, but some of them want me to call them tomorrow to kind of go over and make it make sense to them. But let's see what we can do for you. All I ask you to do is send me your mortgage statement, and I'll need a little bit more information. So I'll probably call you or email you the questions I have. If you're in the process and you locked a week ago or 2 weeks ago and you haven't closed yet, send me what's called your loan estimate. In probably 90% of the cases right now, we're getting people better rates and lower fees. On average, about $1,000 to $2,000 lower in fees and about 1/4 to 3/8 lower in rate. It adds up over time a ton. You're talking thousands and thousands and thousands of dollars that you might be able to save. So that's that part of it. We won't really go over new home sales. Home sales are going phenomenal. The inventory is kind of reduced, so that's pushing up values there. Tomorrow's news, we have the durable goods orders coming out, initial jobless claims, in the second quarter of 2019 GDP, gross domestic product. This should be fine, the GDP. They're probably going to revise this year's because of the coronavirus. Initial jobless claims should be okay, and durable goods orders probably are going to get hit. And that is one thing the Fed's going to watch meticulously to see how bad this virus is really affecting now the U.S. Okay, so this is going through the charting that we did. We hit some resistance levels throughout the day. And then let's get on to, I found this kind of interesting. Home sales surged 12.5%. So there's thousands and thousands and thousands of people buying homes right now because of all the things that I said. So if you're on the fence and you're like, you know what, I don't know if I qualify. Can I get something? What's my credit score? I don't have any money for a down payment, or I have minimal. Reach out to me. The worst case scenario is I can't help, but how about we put you on a path to get you into something maybe in the summer or the fall so you can get out of renting. Renting is paying a mortgage, but somebody else's mortgage, just not yours, okay? But when I came across this was kind of scary. Debt among the eldest Americans are skyrocketing. Why? Healthcare, drug pricing, with all those expenses. My dad he's turning 90 in a month and about a week. And it's crazy because every day I talk to him, he had to go to the doctors, then he got more prescriptions, and he's got this, and he's got their medical bills is more than a car payment or two. And that's what's causing this problem. So the problem's not getting fixed. Let me throw just a comment out there. And if those that just want to find out the facts about this program, because probably 99%, if not 100% of what you know about the program is, I can almost guarantee you it's wrong. A reverse mortgage. So don't turn off the dial. Don't click off. Let me explain one thing. In its simplest terms, what is a reverse mortgage? Basically, it's an FHA loan that you can make payments or you don't have to make payments. Okay? That's all it is. You're not giving the house to the bank. It's a mortgage on your home. So let's say you take out an $80,000 loan. Okay, every month your payment would be, I'll just throw a number out there, $500. You can opt to pay the $500 a month and you'd pay off the house in 30 years, let's say. So we'll amortize it over 30 years. So that payment would be $500. But if you just want to pay the interest on that money, it might be $300. So you can send in $300 if you want, and you'll always owe $80,000. Or if you're just like, you know what, I worked my whole life to get to this stage. Now I want to enjoy life. I don't want any bills. I don't want to struggle. I want to be able to eat, pay for my drugs, and maybe go out every once in a while with my wife and go to the movies. I don't want to make a mortgage payment. I just don't. So what happens is every month the interest accrues. Okay? So let's say you're there for 10 or 15 years, and at that point now you owe $100,000 on the house. But you've also had appreciation in that house. So what happens is once you pass or you want to get out of that property, you would do the same thing as if you wanted to move anyways. You sell the house, pay off the mortgage, and take the rest of the money. If you pass, so I'll talk to the heirs now, if dad passes, you have a year to do something. If you want to keep it, refinance it, rent it out. If you want to move into it, move into it. Let's get you a new mortgage that now that's your owner-occupied property. We'll refinance that house and go from there. If the worst case scenario, if the house is underwater, then you could pay, there's a process that you go through, but you can actually buy that house for less than what's owed on it. We get an appraisal done and you buy it. I think the new rules are at 95% of what the appraised value is. So you can still buy it. But the misconception is I give my house to the bank and I live there till I pass and the bank gets it. No, 100% wrong. So if you're interested in a reverse mortgage for your mom, your dad, or even yourself, let me know. I'll give you the facts. There's no hard sales. I'll give you the facts and you make up your mind what you want to do. But please get the facts behind it. So for those new out there, my name is Dan Frio. I do the mortgage update every day. I do it on YouTube and I also do it on radio. If you're in Chicago, I am on WYLL Radio. It's a Christian radio station in Chicago. And I do it every night, Monday through Friday from 7:30 to 8 p.m. Then I'm on Saturdays on WIND Radio. It's one of the largest talk radio stations in Chicago. I'm on there on Saturday mornings from 7 to 8 a.m. And then all of my shows I put in YouTube and also podcast them. And then every night I try to do a video such as this to just let you know what's going on with mortgage rates and the economy and housing and things like that. So I'm followed by a lot of people in the real estate business: realtors, financial planners, loan officers, believe it or not, mortgage advisors, the whole gamut. So I greatly appreciate all that. And I have a huge, the following gets probably, I add about 20 or 30 subscribers a day, and I'm getting people respond back saying, you know, hey, you're doing a great job. I did have somebody that commented yesterday, and I apologize. Every once in a while, a comment will slip between the cracks, but somebody said that they reached out to us at the beginning of February, and they never got a call back. Here's what happened in the beginning of February. We rebranded the whole company. We went from a company called Parkside Lending, and we rebranded with basically everything. We got a whole new system, whole new computer systems, everything. Within probably 2 to 3 weeks, you're going to see all kind of things that we're going to roll out. We're going to roll out a new website. We're going to roll out an app on your phone for realtors, home buyers. If you need a mortgage, you're just going to boom, 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 boom. You can actually talk to me back and forth on the app. You can text me back and forth. We're going to help you pick the program, pick the rate, lock you in, send out disclosures, everything that possibly can be done. On the realtor side of business, we're going to help you tremendously help new home buyers get into properties. So we rebranded everything. Unfortunately, we shut down the system, and it shut down all of our emails, and we weren't expecting that. So some people did fall through the cracks, and I truly, truly apologize for that. If you're one of those and you've been trying to reach out to me, please call me. That's the best way to get me. The phone number stayed the same. It's 844-775-LOAN, which is 844-775-5626. Or email me. My new email is Danny, D-A-N-N-Y, .Frio, and Frio is spelled F-R-I-O, at preferredrate.com. Okay, so danny.frio at preferredrate.com. You can also find me on the web at thefrioteam.com. Google me, The Mortgage Update with Dan Frio. I hope you like what you see. You're going to see page after page after page of my YouTube videos, my podcasts. They're on iTunes, Spotify, everywhere, all over the place. If you're a loan officer and you're looking, I'm actually looking to hire right now in Florida, Texas, Arizona, California, and Colorado. So if you're out there and you need assistance and you want to grow your business, we're getting calls, probably 20, 30 calls a day. And I can help you build your business, help you make some more money. This business is tough, and a lot of the loan officers, very good loan officers out there, are chasing their tail. It's a great time right now because rates are so low. But you might even want to check out our compensation plan, because our technology is going to blow the socks off of everybody here shortly. If you're a realtor and you're anywhere in the country, especially in those areas that I spoke about just now about realtor or loan officers, reach out to me. I'd like to help you build your brand in those areas, and I think we can help you. And we can partner together with a lot of marketing and some other things that we can help you out. So I want to thank everybody. Thank you for give me a thumbs up if you like my videos. Don't forget to subscribe down below. Tune in daily. Click the bell or choose the bell, so every time I do post an alert, you get it. But I'd love for you to reach out to me if you need help or assistance with your loan. So God bless. Take care. See you tomorrow, same time, same place. See you then. Bye-bye.